Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope everybody's having a great weekend. Next week is a huge week. Why? Because on Tuesday we have US CPI data being released, and this is likely to determine whether or not this breakout to the upside in the S&P 500 fails or succeeds. And why that is extremely important, not just for stocks, but this is also going to decide whether we get risk on or risk off coming into the Forex markets next week. So as you can see, it's this CPI event on Tuesday you have to keep your eyes open for. This is going to be the big headline event next week, and you're unlikely to see much going on leading into this, especially in Forex markets. Forex markets were pretty much dead. The most dead I've actually seen them in a long time, barely moving a lot of the markets. Because of this CPI print which is coming up, money was not flowing into the markets. Once this comes out, we're going to start to see some moves, absolutely certainly, in markets. And aside from that, there's nothing else really we need to pay too much attention to. We do have some other CPI and data coming out. It's that CPI print out of the US on Tuesday that you have to pay attention to next week. Okay, so let's have a look at the scores for the coming week. And the majors scorecard here really paints a nice picture of what we're seeing. We're seeing the dollar continuing to increase the probabilities that it's bottoming, as we discussed in the previous video. We're seeing the euro now coming off of 3 to 1, confirming again that that bottom in the dollar is likely taking place. But we're also seeing the Swiss franc rallying, and also the Canadian dollar is getting stronger. And at the same time, the Australian dollar is holding some strength. So what is this showing? Well, especially the Australian dollar, the Canadian dollar, those markets linked to those commodities, crude oil, iron ore, etc. And at the same time, we're seeing the dollar rallying. And at the same time, we're seeing the Japanese yen go into the negative side of the scorecards. This is painting the picture of 2022. This is exactly what we saw. We saw that acceleration in inflation. We saw the commodity currencies benefiting because of that. And we also then saw the dollar strengthening because the Fed had to raise rates higher, increase the terminal rate, etc. And we are seeing an exact replay right now. And of course, we have CPI on Tuesday, which can change things. But as it currently stands, there is a projection here in the scorecards of a re-acceleration of inflation in the near future. Now, that may not actually be this month. We may see the January print come under or on target. However, we are starting to see a potential regime shift here in the probabilities of disinflation to re-acceleration in inflation and higher for longer from the Fed. Instead of disinflation pivot, re-acceleration higher for longer. So going into next week, first and foremost, it is that CPI data on Tuesday. So we're going to be looking at the US dollar, and we're going to look at the US dollar with setups that we can trade it to the long side or the short side. In other words, being reactive to whatever that data comes out with on Tuesday. And if the dollar rallies, we can look at some of those setups which would benefit from that. And if the dollar sells off, we can look at some of the setups which would benefit from that. So being reactive on the dollar, not trying to predict the CPI event, because not only is it hard to predict, these things can be very uncertain anyway. It's a bit more gambling when you're trying to predict the outcome of a data release. But also the BLS changed the weightings on Friday of the CPI itself, so it's hard to know exactly what impact that will have. It does so far look like the weighted changes are actually pushing the inflation readings higher than they would have been with the old weightings. But again, we'll have to wait and see what comes out on Tuesday. Reactive on the dollar from Tuesday onwards is the first part of the plan next week. And the second part is the pound weakness we discussed last week. I am going to be interested in pound dollar to the downside, absolutely, if we get that stronger dollar. But also we can look at pound CAD to the downside and pound franc to the downside. Why? Because the Canadian dollar and the Swiss franc are both strengthening in the scorecards. The slight issue we have here, as you can see, we don't have any currencies with an outright bullish bias, and we don't have any currencies with an outright bearish bias. And this is not surprising. And this kind of also shows us we're in that regime shift. As the currencies kind of shift their probabilities, they go out of bullish and bearish and they kind of go to neutral and then they kind of move the other direction. So the lack of volatility, and that's what you're seeing here, when you have no currencies greater than 2 or less than 2, that is the scorecards predicting on a 4-week rolling basis that there's just going to be consolidation. Now, of course, the scorecards do not know that CPI is coming out on Tuesday, and that's why when CPI comes out and we put new data in, these will change, and I'm sure from Tuesday onwards you will start to see some probabilities above 2 and below 2 as new data comes in. So aside from dollar setups based on the CPI print from Tuesday onwards, I'm also interested in pound shorts to the downside, and I'm also going to be, especially versus the currencies which are accelerating in the scorecards, and we're also going to be looking at yen shorts as the yen goes from 1 to -1, so -2 on a week over week basis. I would be interested in CAD yen to the upside. I would also be interested in franc yen to the upside. So we're going to be looking at those markets as well for next week. Okay, so let's have a look at the individual currencies, starting with the US dollar, and we're going to look at these on the weekly chart, but I've put the dollar on the daily chart. Why? Because you can see on the daily chart that consolidation last week between the 2-year breakout and the 7-year breakout. And one of the things I've mentioned to you guys in these videos very, very often is the ability for markets to get themselves into positions where they can either go one way or the other just before major news events is very impressive, and it happens a lot. And what we're seeing here is, if you think about it, if the dollar was going to fail, it breaks below the 7-year breakout, retests it, and then you get the rejection and the sell-off. However, if the dollar is going to rally back above it, it comes back, pulls down, retests, the retest fails, and then you get the short covering rally back through. So the dollar is set by consolidating between the 2-year and 7-year breakout levels, which we've had on here for quite a while. It's absolutely set to go either way next week, and that's one of the reasons why you want to be reactive, not predictive on that CPI print. Next is the euro, now doing pretty much exactly the same thing. The major breakout level was over here in the euro. We corrected, and now we're pulling back to retest it. So as we go into CPI, this will be sitting right here, and that's when you can get, I mean, this would be a very mini one, but that's when you can get those kind of, very often it consolidates a bit more, and you get the inverse head and shoulders like this. That's the textbook one where it tests it. But also, this could just come straight back through, and then that becomes the failure or the rejection before going lower. So again, you can see the euro, and this is going to depend also on that CPI print next week, but it's right in an area where this could go both ways. Next is the pound. I did highlight the fact we came back, we test the top of the flash crash, which very often happens, and we basically double topped in this area. My view is for a stronger dollar. It's not just on the CPI print, which is coming out on Tuesday. Who knows what that CPI print will be, but regardless of what the CPI print is on Tuesday, I do think we are going to see a reacceleration in inflation a la 2022. Why? Because there's lots of other data points suggesting it. As I said, not only do the new weightings seem to push CPI readings higher based on the revisions in December and November, which were actually higher, but we are also potentially looking at a bottom in crude oil, nat gas, and as energy starts to bottom, this is going to add fuel to the fire if we're already going to see a reacceleration in inflation because the jobs market is stronger than expected. We saw that in the previous NFP print. Because ISM services are coming out stronger than expected, etc. So my overall view is that the pound is likely to come back to the lows, and that will go hand in hand with the dollar going back up towards its highs. Next is the Swiss franc. I have been highlighting the fact that this is a major double bottom breakout, and I do see the Swiss franc coming up to this high and further this year. However, I've just noted that at the start of the year we've been consolidating, and now we've consolidated, we retested and consolidated. You can see the Swiss franc is actually relatively holding up better than the other markets as they sell off. Even if the Swiss franc goes sideways, you will likely see pound franc to the downside, pound CAD to the downside, etc. Sorry, not pound CAD to the downside, pound franc to the downside, franc yen to the upside, etc. Makes sense? So as the franc moves sideways and the yen goes down and the pound goes down, you see franc yen higher, you see pound franc lower. Make sense? Next is the yen. Now the yen has corrected, and just as in 2022, we saw the yen selling off as we got higher inflation and rates in the US had to go higher. And at the same time, we had the BOJ defending that 0.25% yield curve control cap. Well, now we're faced with essentially a repeat where the BOJ are firing up the printing press, but to defend the 0.5% yield curve control cap, not the 0.25%. And actually, that 0.5% yield curve control cap is needing more and more printing because speculators are actually anticipating that potentially breaking, and so they're actually having to do more now. So you have that side of it, the supply side from Japan, but also if we get a reacceleration in inflation and we start to see the dollar moving higher, this is again going to essentially play out just as it was in 2022. And I do think now we could be seeing the yen back down to its lows in the near future. Next is the Canadian dollar. I did highlight the fact this was a big ABC recently, and the scorecards were projecting what? Consolidation correction in the Canadian dollar as it was going from -3 to -2 to 0. And I do think this continues higher, at least up to this level. And as we get that near-term strengthening of the Canadian dollar, as crude oil starts to strengthen as well, I do think pound CAD to the downside next week would be quite a good one to look for. And also US dollar CAD, based on the fact we get an unexpected downside surprise and let's say the dollar sells off, well then US dollar CAD, as the Canadian dollar pushes higher, US dollar CAD should provide that follow through to the downside. Aussie dollar, big short covering rally. I do think Aussie dollar is coming back down to its lows in the near future. It is one of the stronger currencies in the scorecard, so it's not one of my favorite shorts yet. However, if we start to see the dollar strengthening, I do expect the Aussie to start underperforming alongside the other commodity currencies, but perhaps not as much as the pound, for example, because if we get that continued inflation, you are going to see some support under those commodity currencies. Finally, the New Zealand dollar, and this is a market which I've been highlighting as what seems to be a serious mispricing to the upside, that although we started the year over here, this was running out of road. Maybe we tested this, I said, but the rally we've had in the New Zealand dollar does not match the macro backdrop. And with this double top, it does look like we are now heading lower again. Is that off of the CPI print next Tuesday? Or do we get a downside surprise? New Zealand dollar pushes higher. Even if that's the case, I still think we are now starting the journey towards the lows in the New Zealand dollar. Okay, so let's look at the markets for the coming week, starting with crude oil as we usually do. I do not have a strong bias on crude oil. The data suggests crude oil may be forming a bottom. And last week, what happened, we were looking to the downside last week, and Vladimir Putin came out, said he was going to cut supply of crude oil, and OPEC refused essentially to respond to that with an increase in production. So they refused to offset the cuts by Russia. We saw crude oil rallying. And going into next week, I do not have a very strong bias on crude oil to the upside. I'm essentially neutral. It's bearish, but getting less bearish, which is basically a bottom. And so if you are looking to trade this, any consolidation would be viewed as an opportunity to look for long positions. And if we get into the 83.50 area, this is where the odds start to turn against you, and I'd be looking for a max profit taking opportunity in that area. Okay, so starting with the dollar pairs, and the four green pairs I've got highlighted here are not about the direction of these. These are if we get a bullish rally or response from the CPI print on Tuesday. And the red pairs here are if we get dollar weakness from the CPI. So these four are my top four for dollar strength plays post CPI. And these three are my top three for dollar weak plays post CPI. So starting with pound dollar, this really just goes to show, because the target last week was pretty much down towards this low, the target has basically been unchanged. And what this shows you is that pound dollar has pretty much done nothing last week. We just moved sideways. And this was the story of Forex. Markets didn't move. These targets are for the week. But if the markets don't move, you're not going to get to the targets. We can't force the markets to move. All of these targets are on the assumption that the market moves, right? And last week, this market did not move. So any pullback in this market, continued consolidation, if we get a sell-off because of a dollar rally on CPI, this is the opportunity I would be looking for in pound dollar, down to the lows highlighted last week. Next is euro dollar. We came down, took out the target, and that was the limit of euro dollar to the downside last week. Coming into this week, any pullback or consolidation in this market into Tuesday and then a sell-off is going to be viewed as an opportunity to look for a pullback. And I'm going to be looking for shorts down towards the 1.0550 area. US dollar yen, really nice bull flag consolidating above the previous breakout over here. Can you see this? So what would be great is if this just continues to consolidate, which is very likely going into Tuesday, and then we get the dollar rally, look for that breakout and the pullback towards this kind of broken trend line, and that follow through would be the opportunity towards the 134 area. And the final dollar strength play from CPI that I'm looking at is the New Zealand dollar. We double topped up in this area, really nice momentum, and now we're consolidating with this bear flag. And what I would like to see is any reversal in this market to the downside. I would be looking at a pullback post CPI, and this would be the follow through trade to the downside towards 0.6180 area. Next is Aussie dollar. Now, of course, if the US dollar rallies and we get a stronger dollar post CPI, I will not be looking to trade any of these because these are on dollar weakness. So let's assume Aussie dollar comes down into Tuesday and then we get a reversal and a breakout to the upside on a weaker dollar. This would be an opportunity to look for long plays into the 0.7050. US dollar CAD, we are just ranging and correcting. So if we pull back into CPI and then we get the sell-off on a weaker dollar, this would be the opportunity I would be looking at next week, down towards the 1.3210 area. And the final dollar week setup I'll be looking at is US dollar franc. Very, very choppy. But if this comes a bit higher, especially if we retest these highs and then we get the dollar selling off on CPI, I'm going to be looking for this follow through trade down towards 0.9150. Okay, so the first non-dollar pair that I like going into next week is pound franc. We do have a nice sell-off here and we've started to correct. So any continued correction in this market is simply viewed as an opportunity to look for shorts. And if we can get down to the 1.10 area, this would be the max profit taking opportunity, because once we start to trade into here, the odds of continuing lower are greatly diminished. Next is pound CAD. Now, as the Canadian dollar looks to be coming up and finishing that ABC, we should see further downside in this market in all probability. So any correction, we've had the momentum, any consolidation is viewed as an opportunity to look for shorts down to the 1.59 area. Next is franc yen. We do have a nice piece of momentum with this kind of consolidation. And what I would like to see is if we can break higher in this market, you can look for the pullback. But any pullback, even if we come a little bit lower, any pullback is viewed as an opportunity to look for long opportunities. And the maximum profit taken would be up at this high. If we test this high, especially once we trade into the 144.50 to the 145 area, this is where your upside becomes greatly diminished in this area. Next is CAD yen. We already had momentum and a consolidation, and we had quite a sharp break above this 4-hour consolidation. Look at the way this wicked down, took out all these stop losses and then wicked higher. So any pullback in this market next week is viewed as an opportunity to look for potential long opportunities. And I'm going to be looking up towards the 100 to the 150 area essentially. And the final market here before moving on to gold, silver and Bitcoin is Aussie yen. If we do get a repeat of 2022 and we start to see that re-acceleration in inflation, this is likely going to benefit Aussie yen as it did in 2022. And any pullback in this market, or if we get a breakout and a pullback, is going to be viewed as an opportunity to look for long positions. And if we come up and test these highs, that's probably all you're going to get out of this market next week. Above the 93 area, really, you run out of steam on this market in all probability. Okay, so wrapping up the video with gold, silver and Bitcoin. Looking at the gold silver ratio, you can see we broke out of this consolidation and we've got momentum. We're kind of trading to the upside, pushing above the highs. We are lacking momentum, but we're pushing higher and higher. And actually, I do favor gold over silver, but I am bearish on both of them. And I think next week, I am expecting dollar strength, but we don't have to be predictive. We can be reactive in the short term, but I do favor both gold and silver to the downside. I prefer silver shorts over gold shorts next week. Okay, so starting with gold, you can see we came down and we tested the low, and last week I was looking for further declines, but we didn't really go anywhere, and this is a reflection of the dollar getting caught between the 2-year and the 7-year breakout levels at the beginning of the video that we looked at, and these markets didn't really move. So going into next week, if we pull back, I am going to be looking for a breakdown, and I'm going to be looking for any pullback in this area will be viewed as an opportunity to short gold. Whether you short it on the pullback or the breakout, I'm going to be looking down towards the 18250 area. Next is silver, highlighted in gold because this is my favorite short out of all of them. Again, we didn't really do much as the dollar did nothing last week. A lot of these dollar pairs did nothing. Any pullback would be great. If we get a pullback, I'm going to be looking for potential short opportunities. Again, either on the pullback or on the breakout. And I'm going to be looking down towards the 21.20. And last but not least, we have Bitcoin. We did have the head and shoulders breakout here. So what I'd be looking for is any pullback or consolidation would be viewed as an opportunity to look for bearish setups in this market. I'm going to be looking down towards the 20.200 area. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.